Hello, my name is Nicola and welcome back to my channel. I blog over at thefrugalcottage.com all about budgeting, money saving, investing and lots of different things in between. And in today's video, and don't forget to like and subscribe, I'm going to share with you just how important it is to overpay on your mortgage. Now I realise that requires some kind of surplus in your budget, but the sums over time mean that if you can, if possible, it will save you so much money in interest, and I'll talk about a bit more about that later. So if you've watched an earlier video or ever been on my blog, you'll know that we're aiming for early retirement. That means that we're going to leave work earlier than we should do, but it also assumes that we've got our mortgage paid off. So one of my monthly aims every month is to overpay our mortgage by £185. And over time that means that our mortgage is paid off sooner than it should have originally been. What I'm going to do is I'm going to talk you through like a scenario and run through the numbers of that and kind of talk about how important it is to find even a really small amount each month that you can send over. Now you need to make sure that with your mortgage provider, some of them have a limit on you can overpay by 10% each year, so 10% of the total value of your mortgage. We were lucky to get one that we can overpay unlimited amounts on, but the majority of them now are capped at 10% each year, and if you go over that amount, then you get like another charge because you've gone over that, and the charge is kind of a couple of £1,000. So it is important to check with your mortgage provider if you have a cap on overpayments for the mortgage that you've got, and be wary to try not to get over that. And if you find that you've overpaid the amount you can, then pop the rest of the money that you would be putting on your mortgage in investments for that time being, just so it's not sat around doing nothing even. So my scenario is you, a couple, family, have got a mortgage of £150,000, and the percentage rate of that is 2.79%, and they've taken out the mortgage over a term of 25 years. So their mortgage payments that the bank set up, it will take them 25 years to pay that off, and the total amount that they would pay, bearing in mind that the mortgage that they took out, £150,000, the total that they would pay is £208, £603. So you overpay your initial loan by £58,603, because that is all interest. So £58,603 is all interest that's added onto your loan. The 2.79% is that. So overall, if you leave it and do nothing at all, you borrowed £150,000, the total that you would repay is £208,603. Which I guess isn't too bad. Everybody kind of pays more than what the initial loan is. That's how banks work, that's how they make their money. But I'm going to show you different scenarios for overpayments and explain just how much you can save and just how many years you can pay off your mortgage early by adding on that extra. So if you can find in your budget £100 a month to do the overpayment with, this scenario again, so £150,000 mortgage, 2.79% over 25 years, if you sent an extra £100 overpayment to that mortgage every month, you would save £10,850 in interest. So over the term of your loan, you would pay over £10,000 less to the banks because you're paying that early. And also, you would save 4 years and 3 months. So you'd pay your mortgage off in just over 20 instead of the 25 years that you took the term out for. You'd pay that off in just over 20 years by adding on an extra £100 overpayment every month to your mortgage, which doesn't sound too bad. I think if you kind of got a side hustle going, you might find that, you might stretch to that. But if you look at different numbers, it really does add up. So £100 means you save over £10,000 interest. If you manage to put £300 a month as an overpayment to your mortgage, so again the scenario, £150,000, 2.79%, 25 years. If this family, this couple, whoever they are, managed to find an extra £300 a month and put that as an overpayment to their mortgage, they would save £23,651 in interest, so you wouldn't pay that to the bank, and you'd pay your mortgage off 9 years and 6 months early. So instead of it taking 25 years, it would take you just over 15 by adding £300 a month extra. Now I know that's quite a big number, and to find that extra in your budget might be a struggle. But you know, you might suddenly kind of start a side hustle, or you might sell some things that you don't need around the house and kind of pay it off that way. Lots of different options to kind of get some money extra each month if you want to. And then I just ran another one just to see. Now the final one, again the same scenario, 150,000, 2.79% interest over 25 years, but this time this family managed to find an extra £500 a month to put as an overpayment. Now, if they put £500 a month extra on top of their like ordinary mortgage payment, you would save over £30,000 in interest. So you wouldn't pay that to the bank because you've paid off your loan, which is essentially what a mortgage is, early. And if you manage to find an extra £500 a month, you would pay this off, instead of the 25 years, you would pay it off 12 years and 7 months earlier. So by finding £500 every month to pay like an overpayment on your mortgage, you would save over £30,000. In fact, it's £30,990. So basically 31,000 that you saved by overpaying that every month by £500. Now I know that £500 every month for that like length of time, because you do have to be consistent, I suppose, to hit that, is a lot of money, a lot of extra money, especially when families are on a tight budget. But even if you can find £25 a month, or say £50 a month, so that's what, 2 takeaways a month or something, if you can find £50 in your budget somewhere and overpay that onto your mortgage every month, you will save yourself just over £5,000 in interest, and you'll reduce it by just over 2 years by just paying £50 a month extra over on your mortgage. And actually, if you can kind of see the balance of your mortgage going down, that might spur you on to trying to find that extra money each month to pay that off. Now we, as a family, try and overpay ours by £185 a month, and that's quite specific, and the reason for that is that that's generally the amount, give or take, of the interest that's applied back onto our loan each month at the moment. Is around about £180, I think. So my monthly aim every month is to overpay our mortgage by £185. And hopefully that will mean that by the time we reach our early retirement goals, our mortgage will also be paid off. And then our monthly kind of expenses, our fixed expenses, are really low when it gets to that, which is exciting. So that's why it's so important that if you can, especially when you first start your mortgage off, so in the first couple of years it makes the most difference. So if you can find any spare change at all, put it over as an overpayment and just see how it goes from there. I could change our plans, so I could make it so that our mortgage overpayment is more and my investing is less, but at the moment for me, I'm more focused on building our dividend income stream. I'll leave a link to the last video on dividend investing below, it's a really good one. But I could change that so that our overpayment was much more. However, for now I'm focused on the other side. But eventually that will tip the balance and I will change it so that our overpayments are bigger, especially as we get to the end, like the end, so that the balance is 0. I think I'll change it so it goes a bit quicker by then. But yeah, if you can find any extra money in your budget, try and send over, even if it's really small, a little overpayment to your mortgage every month, and just see the impact on that over time. Don't forget to like and subscribe, and I will see you very soon.